Buckle up. What you're about to read is a compelling snapshot of how European and global markets rallied in a week that kept investors both hopeful and cautious. And this is the part most people miss. Beneath the surface of the numbers, there's a delicate dance of confidence, uncertainty, and strategic shifts that could shape future trading days. European markets experienced their strongest weekly climb in 3 months, buoyed primarily by a surge in banking stocks. This uptick caught attention as traders eagerly watched for signs of a possible ceasefire between Russia and Ukraine, an event that could dramatically influence geopolitical and economic stability. In Dublin, the Irish stock index finished the week relatively unchanged. Despite some gains from banking giants, other major players struggled to advance, balancing the overall flatness. For example, AIB shares edged up less than 1%, closing at €6.98, while Bank of Ireland performed slightly better with a 1.1% rise, ending at €12.73. Meanwhile, permanent TSB experienced a significant 3.2% jump, though trading volume was limited, indicating cautious optimism rather than sheer enthusiasm. On the consumer side, Ryanair saw modest gains of just over 0.25%, and food producer Glanbia increased by 0.5%. Conversely, Kerry Group declined by 1.3%, and Kingspan, despite reporting record revenues, a clear sign of strong operational performance, saw its shares dip 0.8%, closing at €71. This mix of movements illustrates how individual sector news can sway stocks differently even within a generally stable market. Across the pond in London, British stocks displayed mixed results as traders processed the Bank of England's recent rate decision. This decision reignited concerns about inflation, prompting some market hesitation. The FTSE 100 dipped slightly by 0.06%. Yet it still recorded a modest weekly gain of 0.3%. Meanwhile, the FTSE 250, which usually reflects more domestic economic factors, nudged up by 0.1% over the week, an encouraging sign that the smaller companies are resilient. The industrial metals sector experienced a 2% rise, driven by climbing copper prices, which tend to be a bellwether for global economic health. Traders in mining stocks like Glencore and Antofagasta led the gains, rising 2.8% and 2.5% respectively. Automobiles and auto parts stocks also soared, up 5.3%, likely responding to renewed optimism about supply chains and demand, with Dowlais, a key auto parts supplier, leading the charge with a 5.7% increase. As the week wound down, most stocks paired earlier gains, especially in personal goods and travel leisure sectors, which saw declines of 2.5% and 1.7%. This suggests some profit-taking or reassessment after an otherwise positive week. Looking at the broader European picture, the Pan-European Stock 600 edged higher by 0.2%, accumulating a weekly gain of 2.2%. Notably, some individual stocks made headlines. Munich Re, a major German reinsurer, fell sharply by 7.2% after revising its insurance revenue outlook downward, highlighting how cautious expectations remain among certain sectors. Conversely, ThyssenKrupp shares climbed 2.7% as shareholders prepare to vote on spinning off its defense division, an event that's sparking optimism due to increased European defense spending boosting the company's future prospects. In a feel-good story, Lotus Bakeries saw its shares jump an impressive 10.9%, following strong first-half earnings, marking its best single-day performance in over a year, and reflecting continued consumer interest in its Biscoff brand. Jumping across the Atlantic, Wall Street closed the week on an optimistic note, with all major indices edging higher. The Dow added about 119 points, or 0.27%. The S&P 500 rose by 0.62%, and the Nasdaq gained nearly 0.8%. These gains came despite ongoing uncertainties about Fed leadership, as President Donald Trump nominated Stephen Miran, currently the chair of the Council of Economic Advisers, to a short-term Federal Reserve governor role, fueling speculation about potential shifts in monetary policy. Investors remain divided, some wary of how leadership changes could influence the Fed's independence, while others anticipate more aggressive rate cuts, which could stimulate markets further. Earnings reports also kept the pace lively. Gilead Sciences jumped 8.6% after raising its full-year outlook. Expedia gained 4.4%, following an optimistic revenue and bookings forecast. But Pinterest plunged 8.7% after missing second-quarter profit expectations, underlining ongoing volatility in the tech social media space. Healthcare stocks, typically a bellwether for broader market sentiment, declined 1.2% weekly, primarily due to Eli Lilly's shares tumbling after late-stage trial results showed its experimental diabetes pill lagged behind Novo Nordisk's leading product. All in all, this snapshot of markets reveals both resilience and the undercurrents of tension, factors that make the upcoming weeks anything but dull. Are these market movements a sign of genuine confidence or fleeting optimism driven by short-term events? Whatever your take, one thing's clear: markets are never predictable, and that's what keeps them fascinating.